Welcome back. Well, let's get some fundamental analysis going on all the stocks we just discussed. Sid Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning. Good to see you, Ben. Let's talk about the big boy, Bajaj Finance. Highest in pedigree, everything good out there. Growth is likely to come about. But some concerns on asset quality, particularly the commentary on the two and three-wheeler space. That could make the market a little bit jittery. And as always, it's never been a cheap stock, right? What is your view on the numbers? And if you want to look through a read-through for the sector on the whole.
Good morning, Nigel. Yeah, good to be on the show. I think Bajaj Finance clearly one of the finest quality stocks, consistently delivers in terms of growth. Even Q1 net profit grew 22%, which was in line with our expectation. The NII also grew about similarly in line with our expectation. I think, yes, some NIM contraction and the management outlook that further reduction of about 15-20 basis points, that could be a big negative, especially given that stock is trading at a premium valuation. And as you rightly said, yes, the management also highlighted that consumer leverage remains a key area of concern, and that is leading to the company to implement some of the corrective measures across certain product lines. So that is leading to the elevated credit cost. Having said that, what we believe is that it continues to report a healthy performance, strong AUM growth, some concerns on the credit costs sequentially that remains, especially due to stress in the MSME and the auto loan segment. And as you rightly said, again, stock trades at 4.4 times FY27 price to book. So despite the healthy PAT growth CAGR of 25% and strong ROAs of 4.1%, we see limited upside catalysts in the near term due to rich valuation. And hence, we have a neutral rating on Bajaj Finance with a target price of 1,000, leaving a very small upside for Bajaj Finance from current levels.
Okay, that's Bajaj Finance. We have to see how the stock reacts and whether it chooses to see the brighter side of things or not. Siddhartha, hi, morning. What about some of the other names? If you talk about, for instance, yesterday's earnings, IT has been the big talking point. Do you advise at all venturing in and say, buying the dip on a Coforge, or do you think that these stocks are now running the risk of further corrections just because they've run up, valuations are high?
So definitely, I think if you look at some of the IT names, especially the mid-cap IT names, the expectation was of a very strong earnings growth. And that is where the impact was. So the earnings becoming softer, and some of these stocks, Persistent, Coforge, they are very high value stocks. So hence the market impact in terms of the negativity that we saw. But what we believe is that the overall outlook remains positive. There is a beat on revenue. Margins, yes, a little bit have been a miss. So with a strong executable order book and a resilient client spending across verticals, we believe it bodes well for a company like Coforge. In the near term, I think the stock could languish a bit, but definitely one of the high-quality names in the mid-cap IT that one should look at accumulating at lower levels. So we remain positive on Coforge from a long-term perspective. We have a buy rating, and we have set a target of 2240, which is a good, decent 30-35% upside from current levels.
Yeah. Post our interaction yesterday, guys, with Mr. Sudhir saying, I spoke in the evening to a bunch of investors, and they, now, of course, when there's a bit of a, it's not disappointment, numbers are still very, very strong. But the basic difference, when we used to speak with the company, right, they're growing so fast, others are not growing so fast. So people are now starting to question whether, Coforge has been taking on lower quality work.
Yes.
To get those very high growth rates on the top line. But margins are lower. And I asked that question yesterday to the company, that margins are substantially lower to even large cap IT.
Yeah.
Large cap IT is north of 20%. And of course, I mean, there is that bit about, Nigel, I think, which you addressed,
yes,
which is
the third party.
The AI data center investment, etc. as well. So we'll see. But there is a fair bit around this, and we'll see how this pans out. But there's emphasis, Hexaware, lots of mid-cap tech. Anything else you like there from in that space? the mid-cap space, mid-cap tech space, Sid?
So, Prashant, I think persistent is the other one. Both of them has corrected. I think that is where the outlook is. And as you rightly said, yes, again, some of these companies are doing that heavy lifting and spending a lot on the new age digital as well as on the AI capabilities. And hence some impact on margins in the near term. But the two top picks for us in the mid-cap IT names is Persistent and Coforge, both of which we like from a long-term perspective.
Okay, what we'll do is we'll take a quick break here and we come back in just a bit from now with more as far as stock discussions is concerned, and there is a lot to address. And of course, we'll get you that Geo BlackRock conversation as well, Geo BlackRock AMC conversation as well. Stay tuned.